The analysts said obvious drops in industrial output, fixed asset investment, and the preliminary PMI all pointed to a general slowdown in economic growth.
The major reason for slowing economic growth is the slowdown of investment. The real estate sector is to blame for this. China's real estate sector no longer has a population bonus. Demand for housing is reducing.
The economic factors that drove GDP growth in 2014 all registered weak performances, with fixed asset investment growing at a historic low of 15.7%.
The consumption growth rate was not very good either. Of course, the figures released by the National Bureau of Statistics be a little different from the actual picture, mainly because the current consumption structure has undergone some changes.
However, analysts said last year's slow growth also points to some positive changes in China's economic structure.
One of the positive outcomes is that the general economic structure met the target set by the high-level leadership. We can see that the service sector has outperformed the primary industry, which shows that the economic structure has been optimized. If we only look at the figures for the last year's single-day shopping spree, consumption is very strong. This is because some products are more consumptive. However, consumption of real estate has indeed slowed. This is a positive change in the economic structure. In addition, state investment maintained a 20% growth rate in the second half of 2014.
Experts expect the GDP growth rate to further slow in 2015, but they remain optimistic about the general economy.
GDP data alone are not important to the market anymore. The focus on GDP has been turned to reform, and I believe this will become normal in the future.